Hello, everybody. Very good evening. How are you all doing? Hi, everyone. Yes, are we there? Hello, Kavya. How are you? Hi, Vasant. Hello, Amu. Very good evening. Hope you are doing well. Do you have any questions related to whatever we did in yesterday's class? You all can quickly ask me if you have any. In yesterday's class, we had completed the theory of demand and supply. Do you have any questions in the theory of demand and supply? You can post in the chat box. It was good, Amu. How was yours? How are you doing today? Did you revise the entire chapter of theory of demand and supply? Have you understood, Amu? Hopefully, Vasant. So, shall we start with today's class? Shall we go ahead? Okay, Kavya, that's wonderful. So, today we are supposed to start with the concept of theory of production and cost. I will inform Kavya. I've already informed them. It should have been uploaded by now. I don't know why it has not been uploaded. So I'll inform them and make sure that the file is uploaded. Now, whenever we talk about production, can I say production is creation of utility? Yes or no? So from production, there is a process called as converting raw materials into finished goods or converting input into output. Hello, Abdul. So from production, we will get output. From output, we will get stock. From stock, we will get supply. From supply, hello, sorry for the delay. There was some technical glitch. Am I audible and visible now? I hope I am no more stuck. Hi Akhilesh, hello. So actually the system got closed due to which I was not there online. All right, then we can go ahead. करण,
हाँ सर।
मैं तेरे को चैप्टर 3 का फाइल भेजा है, तू वो ओपन ही नहीं किया है।
ठीक है, चलो मैं करवाता हूँ।
हाँ, चैप्टर देख, तेरे को व्हाट्सएप पे भेजा भी है करण।
अच्छा, चलो मैं करवाता हूँ।
हाँ, तू 1 और 2 का ओपन किया है। 1 और 2 कल खत्म हो गया। चैप्टर 3 का भेज।
क्लियर करवाता हूँ।
हाँ, so we are supposed to. Good morning, ayyo. Akka, it is good evening now. So whenever you talk about theory of production, we have certain factors of production. What are factors of production? There are four factors of production: land, labor, capital, and then we have entrepreneur. Yes or no? So, what are the factors of production? There are four: land, labor, capital, entrepreneur. Land is a natural resource. Labor is a human resource. And capital is a man-made or an artificial resource. So, there are lot of features of factors of production. So whenever you talk about features of factors of production, so what are the features? As I told you, land is a dash factor of production. It is a natural factor of production. Then labor is a dash factor of production. Labor is a human factor of production. Capital is man-made. When we talk about land, land gets rent in return. Labor gets wages and capital gets interest, whereas entrepreneur takes away the profits of the organization. Now, when we talk about land, since I told you it is a natural resource, it is anything which is on, above, or below the surface of the earth. So, anything which is on, above, or below the surface of the earth is called as a natural resource. Then labor. Labor may be skilled or unskilled. Yes or no? Labor can be skilled or unskilled. Labor can be physical or mental. So what kind of a labor am I? I am a labor who is skilled. I am doing a work which requires mind. So I am someone who is mental laborer, and laborer does an activity for getting something in return. Absolutely correct, Abdul. Land is fixed in supply. So land supply is perfectly inelastic. Hello, Priya. Labor is relatively inelastic and capital supply can be elastic. So capital is elastic supply. Whenever you talk about capital, capital is physical, mental. No, no. Capital is man-made or artificial factor. Yes or no? So there are many features of factors of production in which I believe people generally do not have a doubt. Now I have to talk about production. Production can be understood in two time periods. That is, production can be understood either in the short run or in the long run. So everybody, production can be divided into two parts. What are the two parts? One is the short run, other is the long run. Now, how do we define short run and long run? But in economics, especially production, we do not define it on the basis of time period. We define it on the basis of factors of production. So, whenever you talk about short run, some factors of production are fixed and some factors of production are variable. Fixed factor is that factor which does not get affected or does not have an impact on output. Whereas variable factor of production varies to change the level of output. Yes, Savarjit. Yes, Abdul. So variable factor is that factor. If we increase a variable factor, the output will increase. So production is dependent on a variable factor. Whereas there are certain factors which are fixed. Production is not dependent on fixed factors. So those factors which are independent of production, they are called as fixed factors. Those factors which are dependent on production are called as variable factors. Abdul, land is a fixed factor. We can also write at least one factor of production is fixed. So in the short run, at least one factor of production needs to be fixed, whereas all other factors of production are variable. And in the long run, all the factors of production are variable. To increase the level of output, we can increase the level of variable factors. So what is a fixed factor which is not dependent on output? What is a variable factor which is dependent on output? More the variable factors, more will be the output. Less the variable factor, lesser will be the output. Now, when we talk about short run, we study the law of returns to factor. And in the long run, we study law of returns to scale. So there are two factors. One is, there are two laws. One is the law of returns to factor. One is the law of returns to scale. Now, law of returns to factor is also called as law of variable proportions. A yes or no? That is what I am doing, Vasant. Law of variable proportions. So are you clear with the factors of production, land, labor, capital, entrepreneur? Then are you clear with short run and long run, Vasant? Kavya, absolutely correct. Abdul, absolutely correct. Yes, Vasant. Give me a reply in the chat box quickly. Are you clear till now? Vasant, where is Vasant? So, here we have quantity of a variable factor. QVF means quantity of variable factor. Then we have total product, we have marginal product, and we have average product. So under the concept of QVF, QVF stands for quantity of a variable factor. Wasn't not okay. Are you clear or not clear? Till now, have you understood everything or not understood? If you have not understood anything, please let me know so that I can explain that first and then go ahead. Yes, Vasant. QVF stands for quantity of variable factor. TP is total product, MP is marginal product, and AP is average product. So suppose if the variable factors increase from 0 to 10, variable factors increased. Now Amu, if there are no laborers, there are no variable factor, can I say total output will be 0? If there are no laborers, there are no raw material, there is no variable factor. Zero variable factor means zero output. Now total product, we employed a laborer. As soon as we employed a laborer, the output has started to increase. 20, 50, 90, 120, 135. So now my output is increasing. 145, 147, 148, 148, and then finally my output has fallen down because my fixed factors are not able to accommodate the variable factors. So on a fixed factor land, I have employed people. It could accommodate only up to ninth laborer. As soon as the 10th laborer came, the output has fallen down. Yes or no? So total product TP, then we have marginal product. How do you calculate marginal product? MP of n is equal to TP of n minus TP of n minus 1. Or we can write it as delta TP upon delta QVF. Basically, marginal product is the change in total product. So if I want to find MP of 7th unit, then my formula will be TP of 7 minus TP of 7 minus 1, which will be TP of 7 minus TP of 6. What is the total product of 7th? 147. What is the total product of 6th unit? 145. So this will be equal to 147 minus 145. Therefore, my marginal product for 7 is equal to 2. So over here, if I have to write down marginal, marginal means additional, marginal means extra. So over here, it will be 20, 30, 40. Can I say my marginal product is increasing? If marginal product increases, total product also increases at an increasing rate. MP increases, TP also increases. MP rises, TP rises at an increasing rate. Next, what happened? MP is 30, 15, 10. How did I get the figures? 120 minus 90, 30. 135 minus 120, 15. 145 minus 135, 10. 145 minus 147 is 2. 148 is 0, 1. Over here it will be 0. So if you observe, now my marginal product has started to fall. If marginal falls, total is still rising. Yes or no? Marginal falls, total rises. but it rises at a diminishing rate. Then marginal is zero. Total product is maximum. Finally, if you observe, my marginal product has decreased. If my marginal product has decreased and it has become negative, so when marginal product is negative, total product falls. Abdul, we have fixed factor. Now fixed factor is utilized completely. If you add another variable factor, what will happen, Abdul? Marginal total product will fall. So up to ninth unit, total product was increasing. But after reaching the maximum point, Abdul, total product will fall down. Yes or no? A reply in the chat box. Abdul, are you there? Yes or no? So if there is a piece of land, the capacity of the land is to have 9 laborers. If I add the 10th laborer, what will happen? The output will fall. What is okay, Abdul? You have understood, not understood. You should reply, yes, sir, understood. No, sir, not understood. Clear, sir, not clear, sir. What is okay? What should I understand? Okay. So next time you ask a doubt, I will say, okay. Now there is average product. Average product is equal to total product upon QVF. So how do you calculate average product? TP divided by QVF. 20, 25, 30, 30. So what has happened? Average product is also rising, but marginal product is rising at a faster rate as compared to average. So when MP rises, AP also rises, but MP rises at a faster rate. How? What are you saying? Priya, what is your doubt? If fixed factors do not have place for variable factors, if you overburden variable factors on a fixed factor, what will happen to output? Output will fall, no Akka? Sir, will it fall? Sir, how will it fall? But what? What will fall, Priya? Can you please post in the chat box and be clear with your doubt? How will I understand? Sir, will it fall? Who? Sir, how will it fall? Who? What are you talking about? अरे SSSS. अरे but what, Priya? What? I don't know what you are asking, Priya. If you have doubt, please post it in the chat box. Beta, this is a revision lecture. You should have come prepared. Now, when marginal rises, average also rises, but marginal rises at a faster rate. Now, marginal average is also falling. 120 divided by 430, 135 divided by 5, 27, 145 divided by 6, 24.1 or something, 147 divided by 7, 21, then 18 point something, 148 divided by 9, 16 point something. This I know it is 14.6. So Yamuna, when marginal falls, average also falls, but marginal falls at a faster rate. So what have you understood? The relationship between MP and AP is direct. If marginal rises, average will also rise, but marginal rises at a faster rate. If marginal falls, average also falls, but marginal falls at a faster rate. So the relationship between MP and AP is direct. Now if you observe over here at fourth unit, MP is equal to AP. Here MP is greater, over here MP is lesser than AP. So we have three possibilities. MP can be greater than AP. MP can be equal to AP. And MP can be less than AP. Vasant, 148 divided by 0. Lovely. Beta Vasant, the formula for AP is TP upon QVF. How is QVF 0? QVF is 9. So 148 divided by 9 is 16 point something. Vasant, clear? So if I have to draw a diagram on the y-axis, we have TP, MP and AP. In this first stage, we call it as increasing marginal returns because MP is rising. In the second stage, we call it as diminishing marginal returns because MP is falling. And over here, MP is negative. So we call it as negative marginal returns because MP is negative. Very good, Kavya. Absolutely correct. Now, if I have to draw a curve, this is TP rising at an increasing rate. Why does TP rise at an increasing rate? Because MP is rising at a faster rate. So, how do you understand this? That if MP rises at a faster rate, TP will also rise at a faster rate. We call this as the point of inflection. It is the point of deviation. After this point, TP rises, but at a diminishing rate and then becomes constant. So here TP rises at a diminishing rate. Then it becomes maximum and constant. And we know that when TP is maximum, MP is equal to 0. Why is TP rising at a diminishing rate? Because MP falls at a faster rate. MP falls at a faster rate. Then what happens in stage 3? TP falls because MP is negative. So over here MP is 0. Over here MP is negative. Now we can draw AP curve. Over here, if you observe AP, MP is equal to AP on the 4th unit. So this is the point where MP is equal to AP and then AP curve falls. Vasant, are we clear? Abdu, Priya, Kavya, Yamuna, are we understanding? So this is the end of stage 1. Now if you observe very carefully, this is MP greater than AP. If MP rises, AP also rises, but MP rises at a faster rate. Therefore, MP curve is completely above the AP curve. Red color curve, MP, is above black color curve, AP. Now, when you are at this point, MP is equal to AP. And when MP is equal to AP, AP is maximum. And if you observe here, MP is less than AP, means when MP falls, AP also falls, but MP falls at a faster rate. Therefore, MP is completely below AP. Yes or no? So how many possibilities were there? Number 1, MP greater than AP. Number 2, MP equal to AP. Number 3, MP is less than AP. So when MP is greater than AP, what is the conclusion? If MP rises, AP rises, but MP rises at a faster rate. Therefore, MP is completely above AP. Then when MP is equal to AP, AP is maximum and constant. MP is equal to AP. AP is maximum and constant. Then MP falls, AP falls, but MP falls at a faster rate. Therefore, MP curve is completely below the AP curve. Now, if you observe this diagram, we say that MP curve cuts the AP curve from above. Dash curve cuts the dash curve from dash at its dash point. MP curve cuts the AP curve from above at the maximum point of AP. So you can be asked a question, dash curve cuts the dash curve. MP curve cuts the AP curve from above at the maximum point of AP. Which is the point of inflection? The point at which MP is maximum. Correct, Yamuna Devi? So inflection means what? The point of deviation. Till this point TP was rising at an increasing rate. After this point it is rising but at a diminishing rate. Tell me, in which stage should you operate? Should you operate in stage 1, increasing marginal returns? Should you operate in stage 2, diminishing marginal returns? Or should you operate in stage 3, negative marginal returns? If you are a producer, where will you stop your production? When TP is maximum. When TP is maximum, it is the point at which you will stop your production. So we will continue to produce till stage 2. Second stage is called as the stage of production, stage of operation. If you enter stage 3, what is meant by inflection? I explained it thrice, Vasant. The point from which TP starts to rise but at a diminishing rate. So, Vasant, before this point, TP was rising at an increasing rate. After this point, TP is rising at a diminishing rate. So, the point from which TP's speed changes is the point of inflection. When MP is maximum, when is that? So see, MP is maximum, corresponding to that is TP. This point is called as the point of inflection. So the point from which TP curve continues to rise but at a diminishing rate, corresponding to the maximum point of MP. That point is called as the point of inflection. Yes, Abdul, stage 2 where the firm realizes its maximum capacity. Therefore, a producer should operate it till stage 2. If he enters the stage 3, it's time for him to change the technique of production. As soon as the producer enters stage 2, stage 3, he should change the technique of production. Hey, are we all clear? Is my video properly visible to you all? Is my voice audible? Vasant, is your doubt cleared? Yes, Vasant Raj. So dash curve cuts the dash curve from dash at its dash point. MP curve cuts the AP curve from above at the maximum point of AP. Lovely. So there were 3 stages. 1, 2, and 3. Then there is TP, MP, AP. In stage 1, TP rises at an increasing rate because MP rises at a faster rate. If MP rises, AP also rises. This is your stage number 1. Stage number 2, TP rises at a diminishing rate because MP falls at a faster rate and therefore AP will also fall. Then TP falls because MP is negative, and if MP falls, AP will also fall. This is the summary of all the 3 stages in the short run. So law of variable proportion has 4 names. Law of returns to factor, law of variable proportion, law of non-proportional output. And since we operate in stage 2, it is called as the stage of operations. Are we clear? So what is long run now? In the long run, all the factors of production are variable, and we study the law of returns to scale. Now for this, we need to understand the concept of isoquants. Beta, in yesterday's class, we had studied indifference curve. All the points on one indifference curve give you the same level of satisfaction. So what is an isoquant? Iso means equal, quant means output. All the points on one isoquant give you the same level of output. So indifference curve was a theory from consumer point of view. Isoquant is a theory from the point of view of producer. In indifference curve, we consume two commodities. In isoquant, we produce one commodity with the help of two factors of production. So iso means equal, quant means production, output, equal output by using different combination of factors of production. So all the points on one isoquant give you the same level of output by using different combination of input. So can I say isoquant is similar to IC? Indifference curve is from the point of view of consumer. Isoquant is from the point of view of producer. Then the same properties as indifference curve. First property, isoquant curve is a downward sloping curve. Second property, isoquants are convex to the origin because MRTS diminishes. MRTS means marginal rate of technical substitution. Technical substitution means technique of production. A yes or no? Are we clear? Higher the isoquant, higher is the level of output. Isoquants cannot intersect each other. Isoquants cannot touch the axis. They are not parallel, absolutely correct. So everything that we studied yesterday in indifference curve, it is the same under isoquants. So delta P upon P means product output. Delta F upon F means factor inputs. So product output, factor input. Now if I tell you that the input is 10% and output received is 50%. Input is 10, output is 50, so output is greater than input. So if I have to draw a diagram, this is your isoquant 1, this is your isoquant 2, and this is your isoquant 3. Now if you observe, the gap between isoquant is diminishing. The gap represents input, the curve represents output. So every time you want to increase your output, the input required is lesser. So what does the gap represent? Gap represents input, whereas the curve represents output. A yes or no? Sure, clear. Now there is another possibility. We call this as IRTS, increasing returns to scale, where economies are greater than diseconomies. And economies means advantages, diseconomies means disadvantages. So this will occur only when advantages are greater than disadvantages. This is called as increasing returns to scale. Now there is a possibility input is 10%, output received is also 10%. So proportion of input and output is the same. So the gap between isoquants also remains constant. IQ 4, IQ 5, IQ 6. So over here, if you observe, the gap is constant. Vasant, the downward sloping curve is isoquant. Isoquant represents output. Higher the isoquant, higher is the level of output. The curve represents output. The gap between the curves is input. So every time you want to increase the output, the input required comparatively is lesser. So at 10% input, you are getting an output of 50%. Lower input, higher output, increasing returns to scale, where economies are greater than diseconomies. Now this is constant returns to scale. Constant returns to scale, economies are equal to diseconomies. So we input 10%, the output that we receive is also 10%. So input output ratio is the same. Then we call it as constant returns to scale. We increased input by 10, but output increased by 50. So input required is less, whereas output received is more. Input 10%, output also 10%. Now what is the third possibility? We have given an input of 10%, but the output received is 5%. So Abdul, input over here we talk about labor and capital. So what is input? Either you can use labor intensive or capital intensive. So we talk about two factors, labor and capital. So here output is less and input is more. Yes. Now output will increase, but the gap will also increase, because every time you want to increase your output, the input required is higher. So what do you observe? The gap is less, then it is increasing, then it is increasing. This is called as decreasing returns to scale, where economies are less than diseconomies. So in the short run, you study the law of returns to factor. In the short run, in the long run, we study the returns to scale. Here, input given was higher, output received increased by a smaller proportion. So there are three possibilities: IRTS, CRTS, DRTS. IRTS stands for increasing returns to scale, CRTS stands for constant returns to scale, and DRTS stands for decreasing returns to scale. in the short run some factors are fixed, some are variable, or at least one factor is fixed, but in the long run all the factors of production are variable. Yes. So is short run and long run the same? The answer is no. Done. All the points on one isoquant give you the same level of output. Using different combinations of input is called as an isoquant. Then same budget line we will study in isoquant also. Consumer equilibrium we studied there. Here we will study producer equilibrium. Everything is the same. Abdul, in the long run, will this happen? How is it possible? No case. So when we study the long run, we need to give an input to get an output. How is this possible that if you decrease input and output increases? Not possible. We are not studying that. So if you give an input, there has to be an output. So in the long run, input will be given, output will be received. What you are talking about is not a possibility that the economists have covered. Bolo, clear. So with this, I have completed theory of production. Chalo, do you have any doubts in the short run, long run, features? Please let me know. I am waiting over here for your reply in the chat box. If you have any queries, you can ask. No, Abdul. All right. So the next that we have is types of cost. Now, whenever there is production requires input, and input is not available for free. So if there is an input, we will have to bear a cost. So under the theory of cost, we have a concept called as explicit cost. Explicit cost is that cost which is recorded in the books of accounts. It is for factors of production which are hired. All those factors of production which are hired, when they get paid, those costs are recorded in the books of accounts. Therefore, they are called as explicit cost. Then there is implicit cost. In economics, you study a special category of cost by the name of implicit. It is for those factors of production which are owned by the producer. So, if I am a manufacturer and I have a self-occupied property, will I pay myself the rent? If I would have rented this property, then I would have got something in return. So you could have earned but not earned is called as implicit cost. They are not recorded in the books of account. So bachcha log, there are two types of cost. One is explicit, one is implicit. Explicit cost is for those factors of production which are hired. Implicit cost is for those factors of production which are owned. Explicit are recorded in the books of account. Implicit are not recorded in the books of account. Explicit cost involve a cash payment. Implicit cost do not involve a cash payment. And when you add explicit, implicit, both, you get economic cost. So there are multiple types of cost which you need to study. The most important ones being explicit, implicit. Can I say implicit is cost is also called as opportunity cost. I repeat, implicit cost is also called as opportunity cost. You could have earned but not earned. Implicit cost is for factors of production which are hired ke owned. Explicit cost is for factors of production which are hired. Then there is a fixed cost. So beta, if output is zero, can fixed cost be zero? Fixed cost can never be zero, it always remains constant. The word itself suggests fixed. Fixed means it cannot be zero. So if output is zero, fixed cost cannot be zero. Then if output increases, will fixed cost increase? Fixed cost remains constant. Output decreases, fixed cost will also remain constant. So whatever is the level of output, fixed cost always remains constant. A yes or no? Give me a reply in the chat box. Have you understood? Rambanalla. Chalo, I am waiting for your reply. Have you understood? Yes or no? Fixed cost remains fixed with all levels of output. Now variable cost. If output is zero, variable cost is zero. If output increases, variable cost increases. If output falls, variable cost falls. So there is a direct relationship. Now, if I have to talk about total cost is equal to TFC plus TVC. Total fixed cost is total cost minus total variable cost, and total variable cost is equal to total cost minus total fixed cost. So if I tell you that when output is equal to zero, total cost cannot be zero, since TFC cannot be zero, therefore total cost is equal to total fixed cost when output is zero. ए बराबर के नहीं बराबर? Clear or not clear? Sure. So fixed cost, variable cost, total cost are the other concepts that you study under types of cost. Now, if I have to draw a diagram, if we write TC, TVC and TFC, here we will have output. Now total fixed cost curve is a horizontal line parallel to x-axis because it always remains a constant. Total variable cost curve will start from the origin. This is your TVC curve. And total cost curve will start from the point on TFC and take the shape of TVC. So TC curve and TVC curve are parallel to each other because TFC is constant. Dash curve takes the shape of dash curve. TC curve takes the shape of TVC curve. Total variable cost curve starts from the origin, whereas total cost curve starts above the origin. TC is equal to TFC when output is 0. So dash curve takes the shape of dash curve. TC curve takes the shape of TVC curve because TFC is constant. TC and TVC curves are parallel to each other. TFC curve is a horizontal line, whereas TC and TVC are inverted S-shaped curves. Now, if I have to explain you a concept, we are already done with production in the short run and the long run. Over here, I have made output. Output is 0, 1, 2, 3, 4, 5. Total fixed cost remains constant. Total variable cost increases. Then we add TFC plus TVC. We will get the total cost. Yes or no? So when output is 0, total fixed cost is equal to total cost. Fixed cost is equal to variable cost. Oh, sorry. Fixed cost is equal to total cost when output is 0. Now, if we have to find marginal, marginal is the change in total. So 2000, 1500, 1000, 4500 and 19,000. So marginal cost falls, then marginal cost rises. And there is a reason behind it. So in increasing marginal returns, MP rises and MP falls. If your marginal product is rising, then your marginal cost will fall. Therefore, the relationship between MP and MC is inverse. Yes or no? When we studied production, in production we studied increasing marginal returns stage 1. If MP rises, then what did we observe? MC falls. In stage 2, diminishing marginal returns, that means MP falls, MC rises. So the relationship between MP and MC is inverse. If marginal product, additional product is rising, your additional cost will fall. Yes. Are we clear? So the gap between TC and TVC is a dash. Chalo everybody, what is the gap between TC and TVC? The gap between TC and TVC is a TFC. TFC is constant. Therefore, TC and TVC curves are parallel to each other. TFC curve is a horizontal line. TC and TVC are inverted S-shaped curves. The relationship between MP and MCE is inverse. Now we have average cost. Average cost. So for example, if I write over your output TFC, TVC, TC, MC, AFC, AVC and AC. Beta Abdul, marginal means additional cost. So if your output is rising at a faster rate, that means you have utilized your resources efficiently, due to which your marginal cost will fall, Abdul. Total cost will rise. So if total product rises, total cost will also rise. But am I talking about total or am I talking about marginal, Abdul? Is total and marginal the same? No. So if total product rises, the total cost will rise. If total product falls, the total cost will fall. So TP-TC relationship is direct. But MP means marginal. Marginal means additional. For additional product, your product increased from one laborer by 20, then by 30, then by 40 units. So by adding one laborer every time, your marginal product was increasing at a faster rate. Therefore, your marginal cost will comparatively fall. Yes, Abdul. Do you agree? So as I showed you earlier in the diagram as well, what is happening? Output is increasing, but marginal cost is falling. So additional, you need to remember that. Output is 0, 1, 2, 3, 4, 5, 6 and 7. As output increases, fixed cost will remain constant. Fixed cost always remains constant, does not change with the level of output. Variable cost first increases 25, 40, 50, 60, 80, 120, 200. So total cost will be TC plus TVC plus TFC. 125, 140, 150, 160, 180, 220 and then 300. Then if you find marginal cost, Abdul, यहाँ पर it is 25, 15, 10. 10 means marginal cost has first fallen, and in stage 1 first marginal product rises. So in stage 1 MP rises, MC falls. Then this is 20, 40, 80 increases. So in stage 2, Abdul, marginal product falls. But what is happening to marginal cost? It is increasing. Now what is the formula for AFC? So first of all, we will write down the formulas for average. Average means per unit. Average total cost is equal to average total cost is equal to what? average fixed cost plus average variable cost. Average fixed cost is equal to ATC minus AVC, and AVC is equal to ATC minus AFC. अब बेटा average total cost can be also written as the TC upon Q, because per unit be divided by quantity. AFC is equal to TFC upon Q, and AVC is equal to TVC upon Q. So let's find average fixed cost. 100 divided by 0, not defined. 100 divided by 100, 100 divided by 250, 33.33, 25, 20, 16.67, 14.28. So if you divide it, simply you will get the answer. Then average variable cost. So average variable is total variable cost divided by output. So 25 divided by 1, 25, 40 divided by 2, 20, 50 divided by 3, 16.67, 60 divided by 4, 15, 80 divided by 5, 16, 120 divided by 6, 20, 200 divided by 7 is 28.57. Yes, Abdul. Yes, Kavya, Vasant, are we clear? Now, if we add AFC plus ABC, we will get AC, which is also called as ATC, that is average total cost. So this is 125, 70, 50, 40, 36, 36.67 and 42.85. So what do you observe? We observe that average fixed cost diminishes since total fixed cost is constant. So if total fixed cost is constant, average per unit will diminish. It will decrease. Average variable cost first falls, then rises. Lowest is 15. And average total cost also first falls, then rises. Minimum is 36. A yes or no? Are you all there? Are you all understanding? Are we clear? So if I have to make a diagram, average fixed cost curve is a downward sloping curve, but it cannot touch the axis, because if it touches the axis, that means AFC is 0. And if AFC is 0, TFC is 0. So can AFC curve touch the axis? Because if AFC touches the x-axis, that means it would be AFC 0, TFC 0. TFC cannot be 0. Then what is happening to AVC? First it falls, then it rises. ATC falls, then rises. So it is a U-shaped curve. This is my average variable cost. This is my average total cost. Both the curves are U-shaped, and dash curve cuts the dash curve. So beta MC curve is also a U-shaped curve. MC first falls, then rises. So MC curve cuts the AC curve from below at the minimum point of AC curve. So beta MC curve cuts the AC curve from below at its minimum point. Just some time ago we had studied what? That MP curve cuts the AP curve from above at the maximum point of AP. So AP is maximized. Then MC curve cuts the AC curve from below at its minimum point. So as a producer, you want product to be maximum and cost to be minimum. AP is maximum, AC is minimum. So AP and AC maximum and minimum. Product should be maximum, cost should be minimum. Bolo, are we clear? Are you all understanding? Are we sure? Have you all understood? Rambanalla. Are we done? Give me a reply in the chat box. Have you all understood this? Okay, Vasant. So what is the gap between ATC and AVC? Can I say the gap between ATC and AVC is AFC? AFC is diminishing, therefore gap between ATC and AVC is also diminishing. All the best, Abdul. Now, why does the AC curve fall? So, beta, in increasing marginal returns, MP rises. The relationship between MP and MC is inverse. So, if MC falls, then AC will also fall. So AC falls because of stage 1 of production IMR. AC rises because of stage 2 of production DMR. What happens in diminishing marginal returns? Sir, under diminishing marginal returns, MP falls. If MP falls, MC rises. If MC rises, AC will also rise. So, beta, over here, do you agree that MC is less than AC? At this point, MC is equal to AC, and afterwards, MC is greater than AC. So, how many possibilities do we have? Sir, MC less than AC, then MC equal to AC, then MC is greater than AC. Yes or no? So if MC is less than AC, what does it mean? MC falls, AC falls, but MC falls at a faster rate. Therefore, MC is completely below the AC curve. When MC is equal to AC, AC is minimum. That point is called as productive efficiency at least cost. So when MC is equal to AC, AC is minimum, and if AC is minimum, it is called as productive efficiency. Then MC can be greater than AC. So if MC rises, AC will also rise, but MC will rise at a faster rate. Therefore, MC is greater than AC. MC will be completely above AC. Yes or no? Can ATC and AVC curve intersect each other? Chalo, give me a reply in the chat box. Can ATC and AVC intersect each other? Because if ATC intersects AVC, it would mean that ATC and AVC are equal, which means AFC is 0. If AFC is 0 means TFC is 0. Is that possible? Kya? Na, 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 na. Not possible. So, beta, the gap between ATC and AVC is AFC. AFC is diminishing. Therefore, the gap between ATC and AVC is also diminishing. So, ATC and AVC can come close to each other, but cannot intersect each other, because if they intersect each other, ATC will be equal to AVC. If ATC is equal to AVC, AFC is 0. If AFC is 0, TFC is 0, which is not possible. Yes or no? If you all have understood, bole to lovely. Yes, Vasant. Yes, Abdul, Manoj, Preeti, Faridul. Are we clear? Dash curve cuts the dash curve from dash at its dash point. MC curve cuts the AC curve from below at its minimum point. Now we can go to the long run. This was the short run wala part. So in the long run, what will happen? See, in the long run, we will again have two types of cost, total cost and average cost. Hi, Amu. So in the long run, all the factors of production are variable. There are two costs. One is total cost, one is average cost. Now in the long run, there are no fixed costs because all the factors of production are variable. So total cost curve is equal to total variable cost curve. Since there are no fixed cost, total cost equals total variable cost. Now, how do we draw the average cost? So we draw short run average cost curve 1, 2, 3, 4, 5, 6. So a series of SAC, not one short run average cost curve, but multiple average cost curves. So a series of SACs will give you the LAC. By joining all the SAC curves, we will get the long run average cost curve. So how is LAC derived? LAC is derived from a series of SAC curves. On the y-axis we have cost, on the x-axis we have output. At cost C we have output Q. Now, will you stop your production at CQ where the cost is higher and output is lesser? No, because you have a better alternative to produce at C1. If you produce at C1, your cost is lower and output is higher. If you go a little lower, you will find cost C2, output Q2. So even lower cost and even more output. But over here, if you see at C2, not only can I produce Q2, but I can also produce Q1. So here we will have Q3. So where will you stop your production? Where will you stop your production? You will stop your production at the point where C2 Q3 because lower cost and higher output. You would want to produce at a point where your average cost is minimized. A yes or no? Clear. So why does the LAC curve fall? It is because of IRTS, economies greater than diseconomies. Then it becomes constant. CRTS, economies are equal to diseconomies. And then this rises. DRTS, economies are less than diseconomies. So yes, Abdul, can I say that LAC is a tangent to all the SAC curves? I repeat, LAC curve is a tangent to all the SAC curves. So in the long run, AC curve falls because of IRTS. It rises because of DRTS. Chal, are we clear? Sure. So let's start solving the MCQs. Question number 1. Identify the correct statement. When AP is maximum, MP is equal to AP. So MP is equal to AP and AP is maximum. Is this the correct statement? Most certainly it is the correct one. Therefore, your answer is A. Yes, everybody. Question number 2. Which of the following statements is true? So the answer is B. Savings can be influenced by government policies. If government policies are favorable, then savings will be more. If government policies are unfavorable, then the savings will be less. Next, question number 3. In the production of wheat, all of the following are variable except. So you are supposed to find a fixed factor. All are variable except. So beta, seed fertilizers are variable. But the field means land. Land is a fixed factor. So the field that has been cleared of trees. Yes, third, the answer is B. Fourth, the marginal product. So they are asking you what is marginal product. Marginal product is change in total product due to change in quantity of variable factor. Marginal means additional. So your answer is B. The additional output resulting from an 1 unit increase in the variable input. So 1 unit increase means change in input and additional output is change in output. So marginal product is change in total product upon change in input, that is variable factor. Next is question number 5. The marginal average product curve show all of the following except. So you have to find an relationship. Which of the following is not a relationship? You have to find one point which is not a relationship. They have asked you except. So when total product is rising, TP is rising, MP and AP are also rising or falling, which is correct. So if you check the diagram, when TP is rising, TP is rising till here, then MP can rise also and MP can fall also. AP also, if you observe, is rising and then AP is falling. So a statement is a true statement. You have to find a false statement because they have asked you except. So the answer is D. When MP is equal to AP, they say that MP is maximum. Is this correct? When MP is equal to AP, MP is maximum. Nah. This is wrong. When MP is equal to AP, AP is maximum. Next, question number 6. Which of the following statement is true about the production function? So, what will be your answer? Can I say production function is about input and output? So your answer is C. The relationship between quantities of input needed to produce a given level of output. So your answer for this question is option C. Are we all clear? Are we sure? Then question number 7. What is diminishing marginal returns? See beta, diminishing returns means diminishing marginal returns. Diminishing marginal returns means MP falls, which is option B. When unit of variable input are added. So when you add variable input to a fixed input and the marginal product falls. So the answer for 7th one is B. Fixed factor we cannot increase because fixed factor is constant. Fixed factor is fixed. The next one is, I think this is an error. This is not there. Question number 8. If a firm moves from one point to another point on isoquant, so all the points on one isoquant give the same level of output. Therefore, answer is B. Which of the following will not happen? There will be a change in the level of output. No, a change in the level of output will not happen. Because all the points on one isoquant give you the same level of output. Next one. Which of the following statement is correct? So when average cost is rising, marginal cost must also be rising. But C is a better alternative. When average cost is rising, marginal cost is above average cost. So this is your MC curve. This is your AC curve. If average cost is rising, which means this part, then marginal cost is above, which means at this point MC is greater than AC. So MC is above AC. Now what is an explicit cost? Explicit costs are those costs which are not recorded in the books of accounts. You could have earned but not earned. So the answer is A. The wages could have made by working as an employee. This is an example. No, this is explicit. We have to talk about No, yes, Abdul, you are correct. Can I say they have asked explicit, not implicit? Explicit is those costs which are recorded in the books of accounts. It is for factors of production which are hired. So, payment of wages to the firm. C is the correct alternative. Could have earned is an implicit cost, which is question number 11. Which of the following is an example of implicit cost? And the answer will be A, the interest that you could have earned on retained earnings used by the firm to finance expansion. Next one. Which of the following statements concerning the long run is false? The answer is C. The long run average cost curve. So if this is LAC, they have said that short run average cost curve at the minimum point of long run average cost curve. So this is least cost, but least cost for all levels of output. That is wrong, because it is for a particular level of output, not for all levels of output. So one word all is incorrect, and therefore the entire statement is incorrect. Yes, Abdul, absolutely correct. Now let us solve question number 13, 14, 15, 16. So in question number 13, they have said that output is 5, average total cost is 300. When output is 6, average total cost is 320, and you are supposed to calculate marginal cost. So the formula for marginal cost is delta TC upon delta Q. But we do not have a total cost. So total cost of N is equal to TC of N. I need to find total cost. So how do I find total cost? It is ATC into Q. So let's multiply Q into ATC. We will get total cost, and the change in total cost is the marginal cost. So if output is 5, average total cost is 300, your total cost is 1500. Then if output is 6, your average total cost is 320. This is 1920. So how do I calculate marginal cost? It is change in TC upon change in Q, which is TC of 6 minus TC of 5 upon 6 minus 5, which is equal to 1920 minus 1500 upon 1. So your answer over here will be 420, which is option number D. Hey, are we all clear? Are you all understanding? Are you all sure? Shall I go to the next one? Okay. So question number 14. Output is 7. Average total cost is 150. And total fixed cost is 350. So they have asked you to find average variable cost, which is average total cost minus average fixed cost. So I don't have fixed cost. How do I find average fixed cost? It will be TFC divided by Q, which will be equal to 350 divided by 7. Therefore, average fixed cost is 50. Now with this, I can find average variable cost. Average variable cost is equal to ATC minus AFC, which is equal to ATC is 150. AFC we found out 50. Therefore, AVC is equal to 100, which is your answer for question number 14. So your answer, right? What was the answer? I forgot. The answer is 100. Yes. The answer is again D option. Only Abdul is replying. What about others? Vasant, Faridul, Preeti, if they are there in the class. Next, let's solve question number 15. Output is 5. Total variable cost 1000. Total fixed cost. No, Abdul, we will be completing chapter 3 only today. 400. They have asked you to find average total cost. Now, average total cost, the formula will be total cost into quantity. But we don't know what is total cost. So, total cost is TVC plus TFC, which is equal to 1000 plus 400. So, my total cost is 1400. Average total cost is, average total cost, the formula is TC divided by Q. So TC divided by Q, yes, Abdul, will be 1400 divided by 5. Therefore, your answer will be 280, which is your option A. And question number 16, they are asking you AFC for 4th unit. So question number 16, output is 6, average fixed cost is 20. Now I have to find AFC at 4 units. Therefore, the formula for AFC will be TFC upon Q, which is 4. I need to find TFC. TFC is equal to AFC into Q. Therefore, TFC is equal to 20 into 6, which is equal to 120. And total fixed cost remains constant at all levels of output. So if total fixed cost remains constant at all levels of output, TFC will be AFC will be TFC upon Q, which is 120 divided by 4. Therefore, AFC is equal to 30. Abdul, your answer is wrong. They've asked you to find out at 4th unit, not at 6th unit. So TFC divided by Q is 30. So your answer is B. Hey, are you all clear? Chalo. Then let's go to the next question. Last 10 MCQs left. If the marginal product of labor is below average product, which means MP is less than AP. So if MP is less than AP, MP falls, AP falls, but MP falls at a faster rate. Therefore, MP is completely below AP. So your answer is C. MP is less than AP. MP will fall. AP will also fall. Next, what is a fixed input whose quantity cannot be increased in the short run to increase the level of output? So the answer is B. That input whose quantity cannot be quickly changed in the short run. So if you want to increase the production, you cannot increase a fixed factor. Fixed factor does not determine production. It is the variable factor which determines the production. Question number 19. Which of the following statement is false in respect of cost of a firm? You have to find a false statement. Now, do fixed costs exist in the long run? No. So your answer is B. Total fixed costs continue to exist even in the production is stopped in the short run. So yes, in the short run that is correct. In the short run, fixed costs cannot be zero. TFC will continue to exist even when the production is stopped in the short run, but they exist in the long run. Long run may fixed costs do not exist. There are no fixed costs in the long run. Next, at output 9, marginal cost is 20, average cost is 15. Therefore, you can see that MC is greater than AC, and we know that when MC is greater than AC, MC rises, AC rises, but MC rises at a faster rate. So MC and AC both are rising. So your answer is option B. MC and AC curves both are rising. Now economic cost, implicit plus explicit. Accounting cost, only explicit. So difference between economic and explicit cost is the presence of implicit cost. So your answer is D. Economic cost add opportunity cost. So economic cost add the opportunity cost. Opportunity cost means implicit cost, which is not found in accounting cost. Accounting means, hello? Hey, am I audible? Am I visible?
आपके द्वारा डायल किया गया नंबर अभी व्यस्त है। कृपया कुछ समय पश्चात प्रयास करें।
Then why is it showing buffering to me? Are you sure am I audible and visible both? Alright, I don't know, for some reason I see myself stuck on the screen. Okay, then we should go to the next MCQ, that is question number 22. But here I am stuck. I don't know why. Anyway, we'll go ahead. So 30% factors are fixed. If there are fixed factors, that means we are in the short run. That means you are studying the law of variable proportions. The answer is A. Okay, Vasant. So Vasant, in the question they have given 30% fixed, 40% raw material, 10% labor. Labor and raw material are all variable factors, whereas 30% are fixed, and they've also said the quantity of other except fixed has been doubled. So there is a fixed factor, there is a variable factor. If there are both factors, then we study the law of variable proportions. Next, beta, are you able to see question number 23? Because on my screen it just shows question 21. Okay. Marginal cost cuts the average cost curve from below at its minimum point. MC curve cuts the AC curve from below at its minimum point. So your answer is C. Now Rakesh has inherited land. His grandfather had paid 10,000. Grandfather. Today, if he sells, it will be 2 lakh per acre. But he chooses to keep the land. So if he would have sold, he would have got 2 lakhs. But if he is not selling, that means he is not getting 2 lakhs. Yes. So what is his opportunity cost? His opportunity cost is entire 2 lakhs. The answer is D. Next, suppose the firm produces 10 units, incurs 30 per unit. Per unit means average. Variable cost 30. 5 rupees per unit. Average fixed cost. Now, what is total cost? So, total cost is ATC into Q. How much is ATC? ATC is equal to AVC plus AFC. 30 plus 5, 35. Then this 35 will be multiplied by 10 units. Your answer will be 350. Yes, 25th answer is D. And the last MCQ, that is question 26, we will cover along with chapter number 4. Faridul, opportunity cost is the opportunity lost. So, if he would have sold, he would have got 2 lakhs. Now, if he is not selling, then how much is he not getting? If I would have sold my land, my opportunity cost would have been, I would have received 2 lakh rupees. But since I am not selling my land, my opportunity cost is not getting that amount. So 2 lakhs is the opportunity cost. Since Rakesh has not sold the land but kept the land with himself. Yes, Faridul, are we clear? So Faridul, if I get an opportunity of, say, currently Ednovet classes offers me 20 lakh rupees, for example. If there is some other class which offers me 25 lakh rupees, do you think I will leave Ednovet classes? Of course. If money is the point, it will. But if I feel that this organization is good, the people over here are good, then it's a different thing. So let's just assume there are two opportunities. One is 20 lakhs, one is 25 lakhs. If I choose the 25 lakhs, then I lose 20 lakhs. If I had all the time in the world, I would have worked in both the companies. I would have earned 20 and 25. Paisa hi paisa hoga. 45 lakh rupees I would have earned. But if I choose 25, I lose the 20. If I choose 20, I lose the 25. No, Abdul, you are wrong. Opportunity cost is the next best alternative foregone. So if I choose an opportunity worth 25, my loss is 20. And if I choose an opportunity worth 20, then my opportunity cost is 25. It is the next best alternative foregone. So Abdul, Faridul, are we all clear? Chalo, if you have any doubts, please start asking me in the chat box. Let me know how can I help you. Do you want me to repeat any concept? You have any doubts? No, Abdul. Opportunity cost is not the difference. It is the next best alternative. That's wonderful, Faridul. Ramman Allah clear. So that's it from me today. Please like, share, subscribe, comment, hit the bell icon. Bye bye. If you have doubts, please post in the chat box. I am waiting for your doubts. If there are any questions, any queries, I will help you. Thank you so much, Abdul. Means a lot. अगर आपको if you want to ask any questions, you can ask me. I am waiting for your doubts for the next 5 minutes. These notes I have already told to be shared with you on the app. So I think they will be sharing it with you on the HiQ app. You need to download the app from Google Store. I've already shared with HiQ. Bye Faridul. See you in tomorrow's class. Tomorrow we are going to start with a new chapter, that is forms of market and price determination. Thank you so much, Vasant. I hope you are clear. All your doubts were cleared. This is a very conceptual and an in-depth chapter. Please make sure that you are going back and revising it, because 2 hours or 2.5 hours will not do justice to this chapter. I have covered only the most important things. But if you really want to practice this chapter, you need to open your material. You need to go through the material and get your answers. Thank you so much, Kavya. But I'm telling you, Abdul, you will have to work really very hard, Vasant. I mean to say that you need to, after the lecture, sit thoroughly with this chapter. This chapter is having a lot of things which are in detail. I've tried to explain as much as I can, but I too have time constraints, because your exams are in the next 15 to 20 days, so we don't have the time. So the assumption is that you come to the class revised. So for tomorrow's class also, just don't come and attend the class. This lectures, that is lunar batch, can help you only if you are actually coming prepared to the class. So that's it from me today. Thank you so much. As I told you, please like, share, subscribe, comment, hit the bell icon. Bye bye. Hope you enjoyed the lecture. If you did, please post lovely in the chat box and in the comment. Thank you so much, everybody. I'll see you all in tomorrow's class. Bye bye.